Good day, everybody. I trust you all doing well and ready for today. We are live. Just want to quickly share my screen. I need some powers from in the office. Excellent. Thanks, Mike. So today is a no problem at all. Today is a very interesting day. And I want to show you why I think it is interesting. Well, in terms of the rules that we apply when we trade. So as quickly as I can get onto it. Okay, no, I don't want to share that main screen as yet. We've got news announcements that are before us. Anyway, if you got your Forex factory open, have a look at that. I'm trying to get onto mine. I'm not sure why the system won't allow me to do that. Share screen. Let's get onto it again. Oh, there you go. Brilliant. Okay. So remember, if you trade in intraday, and in particular, if you trade in the time frames that we are trading, and we are trading off the 5-minute time frame, and I'm going to show you something else, little adjustment I have made in terms of to the trading time frame. But if you trade in intraday, red news, it's a big red flag, right? And what I've said is a rule is whenever you see one red news announcement, try and be out of the market or trailing stops at least an hour before. Okay, don't execute fresh trades, or if you're already in a trade, just trail your stop to the appropriate technical level. It should be break even by the time the news comes in any case. So 2:30 p.m. This is my local time, so it would be 12:30 p.m. GMT, 8:30 p.m. Sync time. We've got two news announcements, which means I have to be out of the market, not executing trades by 12:30, which is within the hour from now. Or if we do execute trades, it must be trailing stops. Then later on, my evening, 8 p.m. my time, we have these 4 news announcements. I mean, these are quarterly announcements. They are huge impact. A high percentage of the times, 80–90%, you're going to get volatility in the market from these announcements. And you got 4 of them all coming in at the same time. So what that means, if we talk an hour per red news, is that 4 hours before, I must be out of the market, which would be 4 p.m. my time, so into that opening of the US markets time frame. That's going to be an area that I need to watch. Now, sorry, guys, I'm not supposed to be muting myself, but I think I'm talking to myself. So 4 hours before, 4 p.m. my time, I should be out of the market. But also, if you ever look at it, just after that, the press conference carries on. And who knows who says what in the press conference. So we might think we're getting back a sense of readable price action. And what's readable price action is price action that allows us to say, hang on, I see this pattern. If I'm taking a trend trade, 6% of the time I'll be to go my way, or a reversal trade 40% of the time. But then with press conferences, who knows? So really, today, I'm really being extremely cautious. I mean, by the time we close off the show, if I'm not in any trades, I am not executing trades. Will I stay and watch? I'll come in when the news is announced, and just to see how the market responds, just part of the insights that I continue to get in the market. And once the news is announced, by the way, on the 5-minute time frame, I typically wait 3 candles, that's 15 minutes, to see if there's opportunities for me to jump into a trade. So bear in mind, with these 4 news announcements here, I want to be out of the market out at 4 p.m. or trailing, that's my time. Now, if the news announced at 2:30 p.m. and I'm giving it, 3 candles just to stabilize, that's up to 2:45, call it, or we get up to 3 p.m. my time. So there's really only an hour window to trade. Now, this does not happen every day, okay? If you trade in multiple currencies, you might have multiple red news, but it's affecting different currencies, different markets. So you can still be in the market. So this is really just once a quarter. So do you really want to be hectically in the market trying to grab something out on an occasion that does not repeat itself often? I don't think it is worth the price. But in any case, let's have a look at what's happening in the market. Okay, sorry, I had pressed the wrong button. Okay, so now what I'm going to do, I want to just show you the what's happening on the daily time frames. Just to stop me from toggling around many screens, I have opened my MetaTrader 5, which I use when I'm trading one of my accounts that I trade. By the way, I trade this on Wednesdays at the Market with George, which is live. So if you go on to the Actions to Wealth pages, you'll find Wednesdays at the Market with George. So we are in the market 4 sessions, 2 hours on Wednesday. So have a look at that. So I got my MT5 up here. I'll go on to the MT4 where I got the 5-minute chart setup. But I just wanted to take note of something. So the 7 markets that we are trading. Okay, quick look, euro versus dollar. Obviously, you can see we are in a market has been a bear trend. Thick blue line, 10 EMA, which we use as an indicator of trend strength. Market bounced off that. Fantastic. We always expect a pullback, profit taking, attempts to reverse, whatever the case may be. And the bears had a decent enough reversal candle. Okay, and they triggered the sell, which is fantastic. But then you got to ask yourself, hang on, if the bears triggered the sell coming off the 10 EMA, how come we didn't have successive bear candles? So that already is just giving a bit of an announcement that there is something wrong with the case for the strength of the bears. So you got to keep watching the market. Doesn't mean the bulls have taken over, but if you look at the succeeding candles, you can see full bull candle at some point sold into the close. Full bull candle at some point sold into the close. So although the bears failed at this point to capitalize on the selling, that the opportunity they had, they're still managing to repulse the bulls, hence all the selling into the close that's been taking place. So there's a potential for a lower high after this reversal. So it could be a double top lower high. Now, what is interesting for us to note, while we use the 10 EMA as an indicator of strength, the 20 EMA is highly respected by the market. Okay, most traders use that, algorithms use that, and we use the 20 EMA to find trades in a trend as well. Okay, so any pullbacks to test the 20 EMA. So here there was a test of the 20 EMA, but it's a lower high that's been created after this bear breakout. So it wouldn't surprise us if the market comes back and tests that 20 EMA and creates a lower high or a double top. Because until the bulls have enough strength to put a candle that's a full candle that's it's low above the moving average, above the 20 EMA, until the bulls are that strong, the probabilities will favor the bears. So until we get a bull candle, it won't happen today because of where we started, but at some point, the bulls are strong enough to give us a double top or to come up here until they're able to put a full candle above the 20 EMA, which is an announcement that we are strong enough to change the structure of this market. So even thereafter, if there's an attempt to resume the trend of a double top, whatever, that close above the 20 EMA, which we call a moving average gap bar, gap candle, gap bar, will be an indicator of strength. At that point, we'll enter into one of those patterns we spoke about long last year, major trend reversal alert, MTR, major trend reversal alert, which is now sent to us. Be on the alert that the trend may reverse in favor of the bulls, but for a trend to reverse, we enter into a trading range, and our mind shift and we start trading ranges. Okay, sell at the top, buy at the bottom. But key point is to note where we are and not to forget that. Have a look at Hang Seng 50, okay, which is just opened, it's just reopened. Yep, 11:15 my time, so it's just opened again. So very strong bullish price action. We'll look at that just now on the 5-minute time frame. But remember, I'm saying remember, there's a video I shared with live trading buddies. I will ask Mai if she's got that to post it in the link. If not, we'll make it available to you guys. My brief contribution to Monday's live trading buddies. What was interesting about that, what was important in that video, I said to the guys, you know, when you look at our 5-minute, I'll show you just now, we always mark low of yesterday, high of yesterday. Those are key levels for us to watch. But one of the things that I introduced and I shared with the guys that even though you've marked the low and the high, you always need to have a look into context. In other words, just go and look at the last 3 candles before the previous day. Get a sense of what the market was doing. Okay, so there we had 3 candles, bear candle, bear candle, bear candle. But if we look what we had here on the 9th of March, and I have that level marked for us on the 5-minute, that low. Doji candle, after the doji candle, so the doji candle is a trading range, although we are in a bear market. Okay, then we had a follow-through candle, good for the bears, but at that point they failed to give us the close. Had another follow-through candle, almost at the bottom of that trading range, and a huge bear trend candle, good for the bears. But whenever we break out of a trading range, we always want to see the breakout candle and the follow-through candle to confirm for us strength of the bears. So the fact that after breaking beneath the trading range, strong bear candle didn't follow through, we're still in a bear trend, but that should have been an alert for you that there might be a pullback coming. Okay, pullback might only have been as far as breaking above the high of that candle, could only have been that. Or, like we're getting today, is still pulling back. But there's still the 10 EMA. Are the bulls going to be strong enough to break above that trading range? Break above the 10 EMA? And if they do, well, good for the bulls. Let's see if they're able in subsequent days to put a full close above the 20 EMA. So we're still in a bear trend. It's a pullback, profit taking, bulls trying to reverse the market, whatever the case may be, does not negate the fact that we're in a bear trend. So we need to watch what's going to happen at the EMA. And when you get down to the 5-minute, that level of marked it, I'll show you, breaking out of the trading range is key for us to keep in mind. S&P 500, so following the same kind of logic, you can see lower high here, another lower high here. As far as the bulls are concerned, they'll be saying, hey, hang on, there is a double bottom for us that's formed with yesterday's candle. Fantastic, good for the bulls. But with my mind still thinking bearish, I'm seeing lower highs. I'm seeing the 20 EMA. I want to see if the bulls are strong enough to break above that. So that level, 11th of March, will be marked for us. There's a lower high. The market might get there, bounce off it because it still would be a failed breakout above the 20 EMA. So if you're in the market and put the news aside, if you found a trade and it's going long, don't pack your bags and go away and things might go up forever. That is a level of resistance where there might be a reversal, a major trend reversal, which you need to take care of. Now, just park the news aside. There are times when the market has what we call, as far as our price action trading is concerned, a major trend reversal alert. Okay, it's a major trend reversal. I put the A as an alert. It doesn't mean the trend is going to reverse, but there's going to be reversing price action, which could be a trading range, tight trading range, brief 1 bar trading range, doji, whatever it may be. Now, those times we need to be aware of. So I look for these reversal trades at certain times in the day. Now, remember our trader's equation. Risk, reward, probability. Risk, we know how to manage, whatever percent you're risking, 0.5%, 1%, 2%, whatever. Reward, where you want to take your profits, 1-to-1 at a technical level, whatever, we can manage that. Probability, who knows? All we know is one part of probability is that our particular strategies, if we follow in trend strategies, 100% of the time will be right when the market moves in our direction. Our strategy will tell us 60% we're going to be right, 40% we'll lose, but we trade manage. Okay. But so that's one part of the probabilities when you trade in trends. We're 100% certain that 6% of the times will be right. Other part we can manage. We don't know when out of 100 trades, which 60 will be winning, which 40 will be losing. Okay, so we just manage our trades. But when you trade in reversals, where we get a higher profit than we do on trends. With trends, we're talking 1-to-1 returns, 2-to-1 returns at best. It could be a bit more, could be a bit less, could be 0.5 if the market turns against you. But when you take in reversal trades, we want to hold those trades through minor reversals and try and bank those 3-to-1, 4-to-1, 5-to-1 rewards. 3-to-1 reward of your 0.5% is 1.5, or 2% is 6%. The scale can be quite magnanimous. But you have to understand the difference between trend trading and reversals. So when we trade in reversals, there is key times that I look for reversals. One is during the Asian session open. So when the day is opening, and you've got to see which market you trade in. So whenever those markets open, those first couple of hours, I look for trend reversals in those. And then I wait until we get to the European markets, London markets open. In the couple of hours time frame, I look for trend reversals there as well. Then I wait for the open of the US markets. That's why I just said, forget about the news, because today it's not going to happen. I'm not going to be in the market. But when the US markets open, which my time is 3:30 p.m. to 5:30 p.m. is a 2-hour period, 1:30 GMT to 3:30 GMT, and 9:30 p.m., 11:30 p.m. Sing, if I'm correct, yes. So I look for reversal trades, major trend reversals there. In case the market turns, I want to get in there, and I know I only got, I'm only 100% right 40% of the times, but if I can manage it well when I get those trades, that's when you get the big winners until the sessions close. So that we need to keep in mind. Okay, so talking about the S&P 500, point is, if you're taking a trade anywhere in here in the Asian session, you don't go away, because who knows, when you get to the US session, at this point, you might get a double top and you might get a major trend reversal in the day. So that's one of the points. So it might have been a beautiful bull trend from morning, and you've capitalized on it. Fantastic. Okay. But when you get to the US markets, when they open, The market might create a trading range and a major trend reversal, which means you need to exit your long trade if you are still in the long trade or if you have been stopped out at a technical level, and then you need to sell back. This is what happened on this particular day. Okay, so on this day, the market would have opened somewhere here. And at some point, it was a beautiful bull trend day. So if it picked up a bull trend, it would have been fantastic. But you can't ignore this 20 EMA, descent in 20 EMA. At some point, by trying to break up how it failed, it then reversed. So if you had come into the market at that point and picked up the trend reversal, major trend reversal, or if you had been observing and been saying, I'm going to wait, I'm not sure, let me wait, just wait. Because then you could pick up a major trend reversal here and trade it all the way down. So there's always the opportunities in the market. If you don't like major trend reversals, because of this 40% probability, even though you can make a lot of money, just wait for trends. In between the opening sessions of the Asian, European, London, US markets, just trade trends. Wait for pullbacks to the EMA, boom, take a trade. Higher probability of success. Nikkei 225, again, same kind of thing here, lower high. We're trying to break above that trading range. 20 EMA is a big resistance factor. Will the market close above it, or will the market bounce off it? So at this level here, which was the low of February, okay, broke through it, big breakthrough, not good enough follow through, tails on top. And you can see the market has tried to bounce off that. So that's been a level of resistance. Now, for the first time, if today closes above this level, we have a strong close above the trading range. But because of the trading range, you expect a breakout. So if you take trades, you expect a reversal. UK 100 derivative. I think that's the best way to describe it. Of the FTSE 100. Trading range behavior. Again, if you have a look at this low that we have, February, around there, market has been creating a trading range top around that level. If we look at yesterday's high and look at yesterday's level, we'll look at that again shortly. 3 candles before, inside candle, bear candle, inside the trading range, in between the moving averages, another inside candle. This one's inside that, so that's an outside candle. So trading range behavior, if you have in trading range behavior, what's the rule for trading range trading? You want to sell as high as you can, so that when this thing collapses back into the trading range, you make money going short. And when the market reaches the level of support, you want to buy from support all the way back into the trading range. So for me, the bias is here with the potential lower high failed breakout above a trading range. I'm looking for possible shorts, okay? And let's see what the market provides us. Now, here's the interesting thing about these multiple news announcements. So you may sit there, get all this analysis, you're ready to go, and your rules say get out of the market, stay out of the market, but you come back and observe, and man, you've had everything just go your way. Do not change your rules the next time round and say, oh, hang on a second, you know, if everything looks right before news, I'm going to stay in. If you go back and look at all these news announcements, you quickly realize that you will not make money more often than not. You lose a lot more money by trying to trade the news. It's been tried many times. So stick to your rules. If they say stay out, stay out. Bitcoin, we are trying to break out above a tight trading range here. We have a lower high, and for Bitcoin, that lower high is a strong level of resistance. And we'll have a look at today. There was an interesting spike up and spike down on today, which has got a lot of information. You can quickly jump to it, and I'll show you. But as far as Bitcoin is concerned, look at all the closes that we've had so far. Everything closing on or near the moving average, just confirmation of trading range. We get trading range price action, and the breakout expect to fail, bouncing off potential lower high. So if the bears are strong, they must capitalize on this market and give us a close on or near this low. If they do that, we are at the bottom of a trading range. If you take shorts, expect reversals. The bulls are strong. They have to give us a break above that. Gold. Interesting how we yapped. George just kept on yapping about, about selling gold for months. And eventually, at the levels of resistance, we have had a decent enough reversal. And if we had a look at what's happened the past couple of days, good candle for the bears, closed beneath the 10 EMA. Dodges here, so bears need to have follow through. They're decent enough follow through. Yesterday, closing beneath the 20 EMA. And if bears are strong, they just need to give us one more candle. Okay. And for us trading, we'll have marked the highs and the lows. You know, if it gives you the break beneath the low and the trade is there, you execute the trade. We want to jump into the trade and see if we get a big bear candle there. If it fails and it reverses, then we manage our trade, we get out, we wait for reversal pattern and we go long. So there's nothing wrong on a good day if you have the capacity and the time to be long in one particular session. There's a major trend reversal that's created, and if it fails and the trend continues, you pick up another trade. If it then reverses in the next session, the American session, you just reverse with the trend. That's the beauty of trading price action on these time frames. All right, so let me go. Okay, Davis got a question, got a level drawn on GBP CAD. Now it's working down. David, I'm gonna try and remember that before I close and put up the GBP CAD and have a look at it because it's not on our charts. But I will definitely just keep that in mind if we get time. Okay, so now 5 minute or 5 minute charts. Let's just go through them quickly. So I've been watching this, a lot of things have been happening. Basics by now, guys, low of yesterday. See, I've gotten smart. Instead of writing things on the charts, I write them on the actual horizontal line. One of my clients showed me that. I said, George, why are you just, okay. And here's a guy who's been trading forever, but I like writing things. High of yesterday, midpoint, 50% of yesterday's range. So basics, those go in there. Okay. Opening of the day, we had a wedge pattern, tried to break up above that, then we did a double top and with a deep pull back to test the open of the day. And now then we had a measured move. Always put your measured moves before things happen. So whenever you see that kind of trading range, the bulls break about it, how far they're likely to go. So we would have expected the bulls just to keep pushing this thing up. You know, if this was really definitive strength, okay, then, you know, there was a wedge, they failed, double top, failed. Now they have an opportunity just to give us one more candle. So that's that dotted line is our present high of the day. They couldn't even get to that measured move as we got into this opening range of this present session. So when you see that, I mean, it's like saying, okay, if the bulls were strong, they'd agree with that, or if just gotten a high one, a first pullback, call it high one, you know, first high to go to revert back into trend. But they, okay, big warning signals. Why didn't we get even a small bull candle to confirm strength? Okay, so when you don't see that strength, then you just expect a trading range. But in a trading range, you look to buy low and sell high. Remember, I've spoken of separation. You know, you need at least separation between 6 candle separation. So while that's a high, I just consider that as one particular high. So my double top would have been that. Okay, or we could have, oh, okay, that's present high of the day. Oh, that's a double top, and just ignore that for the purposes of the double top because you don't have the separation. Whenever I don't have 6 candles separation between key levels of support, I consider them as one because the force is creating this double top here with little separation. They are the same forces. Bulls are tending to go up, so just consider that as one. So whichever way you mark it. So having seen that double top, you say, okay, now let me see confirmation of the strength by these bears so I can jump into the trade. Now, if I want to see confirmation, I need to see strong candles, successive candles. So we have that one beneath the 10 EMA, good. We had another one follow through beneath the 20 EMA, but right at the bottom of this pullback here. So show me a bit of strength. Give me one more candle. We get a doji. We start to go sideways. This is not a lower high to trade. We have to wait for the market to come back and reestablish the pattern for us to go short. Okay, I'm now just speaking, completely ignoring the news and the fact that it must be up by 12:30. So if you're going to trade, trade with caution. According to our rules, we should not be in the market. Gold, trading range. That's from the open of the day, that magenta line, our present high, our present low. So we just in the, the bears at some point would have seen that trading range, this low, that time, that low. And if they had strength, they would have broken through to get to a measured move here, level of support, same as that high and that low measure of support. But we didn't get that. So we are in a trading range. A trading range is beautiful. So if we only had the news announcements coming up in 2.5 hours, we just wait it out, wait for that to pass, because a trading range is breakout mode. At some point, the market will break out. Okay, so you can always come back and have a look at that. I want to just jump to Bitcoin, then I'll come back. Now here's something that's very interesting. So since we launched the Wednesdays at the market with George, where I am live trading in this trading room, 2 hours in the morning, Asian Open, 2 hours European London Open, 2 hours US markets open. Then the last 2 hours of the day, I just found that my levels of concentration were being affected, by looking at a lot of things and talking and explaining stuff. So I decided to move 3 charts to the 15-minute time frame. So Bitcoin, I'm now off on the 15, Nikkei is 15, and gold is 15. Okay, so just takes pressure off me. I don't have to scuttle through all 7 markets every 5 minutes, which is fine if I'm not talking or explaining stuff. But when I'm doing so, it's easy to get distracted and make mistakes or miss out opportunities. So Bitcoin on the 15-minute time frame. Remember, we spoke about where it is. So that's our present high of the day. Now, so whenever I see that kind of price action, it could be made up by several candles up, several candles down. That for me is usually exciting. There's strong forces in the market that have tried to break out as bulls, but they've been repulsed by strong bearish price action. So at some point, there is going to be a breakout, and whoever breaks out will have momentum behind them. So presently, based on what we looked at when we're looking at the daily chart of Bitcoin, my bias is bearish. So if the bears break beneath this low measured move, this low to that high will be all the way down here. So that will be the measured move, okay, of them breaking out of, I just call it a V trading range. And that would mean they would also close beneath the measured move of the breakout of the low of yesterday. So the low of yesterday, the high of yesterday, if you put a measured move beneath that, that's how far they would go. Now, what is interesting, when they created that, it was exactly to the measured move of yesterday. So any forces that were interested in breaking above the high of yesterday have already been satisfied by reaching the measured move. Okay, so profit taking, selling by the bears, and the level that remains to be tested is here. Will we get it? Well, we'll have to see if we get price action downwards, and that will be the target if the market can get down there. So pretty interesting for Bitcoin. I'll be watching this with the news to see how the crypto is affected by at what rate it's affected by the news announcement compared to stocks. Okay, let's have a quick look. Let's look at UK 100. Guys, talk about that. Okay, so UK 100. That level there would have been the measured move of the breakout above the high of yesterday. Okay, so we didn't get there. So there was a level of resistance in here, probably 50% of that. But I'll mark that. Here's another level, which I think was interesting to look at. It's a key level, which it was a lower high open inside trading range on the 11th of March. Okay, and that level on the 11th of March, if I put it up on here, I think it's going to clutter it. Let's see. Okay, can still see it. So there is 11th of March level. So it was a trading range. It was a lower high, but a very interesting lower high in the form of a doji. So in the lower high, two-sided price action said trading range, which means any attempt to break above that is going to be faced by the forces that try and make a breakout fail. So most breakouts about trading ranges fail because the trading ranges want to sell high and buy low. And if you have a look at it, we also have the 20 EMA. So there's a lot of resistance in this area that is repulsing the bulls. The bulls have to be strong enough to close above that trading range. There's that level that we've marked. They went above it and they failed to look at that just now. And they also need to be strong enough to close above the 20 EMA. So my bias with UK 100 is selling. Okay, so that's the level that we saw, the high of that trading range. And when you look at it, broke out above it, we need to see a follow-through candle, absolutely minimum inside candle, not good. So big sign that there is a problem. Okay, so when you see all of these trading ranges and dodges, whatever time frame, they are giving you information. You always need to ensure that they are clearly marked. Tried to break out, failed, and then double top. So this is the present high of the day. Now, if you have a look at that price action, which is quite interesting, it doesn't give us clarity in terms of where we should jump into trade. So if we say, okay, market went up, came down, went up, did a double top, enough separation, 6 candles, okay, we need to see strong bear candle, first one closing beneath that trading range, so good for the bears. Then we get back at that level of resistance, now support. We just need to give us strength that the bears are ignoring that, give us a couple of candles, fails, bearish, bullish price action, so we kind of go sideways again, back into the trading range. Now we have a trading range forming, no entry for us to jump in. So we wait, we watch, and we see what happens. How would we jump in back into the market? 2 ways. Either the market resumes up, and then we get a decent enough bounce off this level, or right at the top that level, then we know, okay, we have another double top that has been established. We wait for a lower high, and then we trade. Alternatively, it may not go that far, it may just come back and bounce here, leave it, wait for acceleration down. Now, bear in mind what I said earlier on. We look for these major trend reversals at the opening of the session, a couple of hours. Now, those couple of hours, for me, range GMT, 7 a.m. to 9 a.m. Okay, that's the open of the European London session. That's where I look for major trend reversals. Thereafter, I park looking for reversals and I wait for breakouts and look for trend pullbacks. So between now and the open of the US markets, I'll just wait and say, well, I want to see a breakout. If I get a breakout, trend pullback, then I can trade it. That's what you wait for. So we don't rush into it. Okay, so let us see if we can find GBP CAD. Oh my goodness, I'm going to embarrass myself here. Where is GBP CAD? There is GBP CAD, okay. And let's plonk it in. I go back to the question just now, just to make sure I answered quickly. But thanks for the question. And hopefully. Okay, color scheme, good for my eyes. Let's do that. We want candles, don't want the grid, show peer separators, chart shift. I'm sure we can work with what we have. And I think you said 30 minutes. Okay, I'm just going to set indicators. Oh, slow down, but slow down. Okay, moving average. Let's put the 10 EMA. So I'm just going to go back to the question, and the question was, got a level drawn on GBP CAD at 1.66265. Two six 1.66265. Okay, there's a level there. Now it's working around on the 30 minutes. My entry chart is bullish. What time is this? I presume you're talking about, because this is the 30-minute and this was probably the last one. Is it bullish? Okay, it depends. I presume you sold and you're asking, is it bullish? Okay, so let's do a few scenarios. If you have sold, so that was the last 30 minutes. Let's assume, I'm guessing now, that you sold here. That let's just assume you sold beneath here. You saw that, you said, okay, I'm going to sell because that's a bear candle. I'm going to sell. Fantastic. Where would you have put your stop? You got to look to the left and say, do I see a decent enough lower high for me to put my stop? The only place, not the only, one of the places you could put your stop is there. Okay. Another place you can say, oh, I don't want to put my stop up there. Where else can I put my stop? There is an outside candle. All of this price actions is inside that candle. Outside candles are trading ranges. You can always say, okay, let me see if I put my stop above the trading range, because the bulls might want to break out above that and create a measured move. It might fail. So you could put your stop there. So that's the most conservative, etc. That's where you would have to put your stop. You could argue there's another little trade in range there, outside candle, but still I think you're going to be in the same zone. Yeah, so your stop is going to be somewhere up here if you've taken that trade. And if you've taken that trade, what is your goal? Okay, firstly, you know there is a trading range is likely to be a reversal at the bottom here. So you got to be in the market to manage your trade. So if it starts to reverse, you can get out of your trade pretty quickly. But if you want to hold on and say, okay, if the bears are strong, they'll break out beneath that, might give me a measured move, and it might reverse. Because you're going for a measured move, you've got to put your take profit somewhere just above the measured move. Just like if you put in your stop, it measure moves just above, because the market might just come and bounce off there. So if you've taken the trade based on those decisions, then you got to leave it, because one other thing that you need to manage, you need to have rules as to when you move your stops to break even. So for me, if I take a trade, so if it reverses immediately and it closes above my entry point, I'm just going to close the trade and stop myself out with a third loss, 0.5%, whatever it may be. But if it goes my way, I want to see a trend candle in the direction that I'm taking the trade. And if I see that trend candle, then I can pull my stop down to above that trading range level. So that's like I'm now half the risk. If I then get a follow-through candle breaking beneath this, then I can put a break even. So if you've taken that trade, do that. In terms of buying, there's no reason to be buying in any of these. So I wouldn't have done that. All right, guys, we are spot on time, 32 minutes late, but thank you very much. Remember to check out Wednesdays at the Market with George. We'll catch up with you next week. Thank you, Maya. Appreciate your help.